Exit Liquidity, where you find out how not to be fucking exit liquidity.
This is, I think we're on episode 9 of TFI Summer Podcast. So we have Jose, the founder of NFTperp, on. Appreciate you coming on.
Yeah, thanks for having us. Excited to talk about all kinds of things. And I gotta listen to more episodes from you guys. Exit Liquidity is a great name.
Thank you. I appreciate that. We like to start off with a little bit, about you, how you got involved in the space, but kind of to steer us in the right direction, stay on brand a little bit. We like to ask kind of what were the most memorable or significant moments where you were Exit Liquidity?
Ooh, it's a good question. All right, so I got into the space before getting in crypto, I worked in private equity, and then my friend Ben Lakoff, he's now the Bankless Ventures, one of the partners is running the fund with David in mind. So when he first started in crypto, it was like back in 2016, 2017, he did an ICO. This was like an artificial intelligence trading platform. And I was helping him. I was like, we're best friends. And he's like, this is quite interesting. Like, go learn a little bit about Bitcoin and Ethereum. And he immediately got me hooked. And I was helping him with this ICO operations a little bit, and a little bit on like bounty hunting and whatnot. And then my previous boss, who was the GP at the private equity firm, moved over to Asia and set up a crypto-focused venture firm. So I joined as a junior partner, worked at the fund for about almost 2 years. They had a high frequency trading desk as well. And then bear market came. I just didn't really enjoy working at a fund and managing and helping people manage like their capital. So I left, go back into digital nomading. I was kind of fucking around with product management for a couple of years, focusing on helping medium to large size businesses optimizing their user acquisition funnel, retargeting, to work with dev teams and products quite a bit. And after around 2020 was when I got back more heavily into crypto, just DeFi summer, just kind of like everyone else. Around 2021, I got into an NFT investment DAO. That's when I started to take NFT more seriously. Missed the initial ape and hash masks, like all that run, but thought that it's quite interesting space, and there's like a pretty big missing component of the market. That's you can't short NFTs. So co-founder and I kind of got together and just started to build NFTperp. Pretty long process. We started building around January of 2022. So, previously I worked on a DeFi aggregator as well, failed, but learned out from my experience during roughly 2020. And I would say my moment of exit liquidity, I bought the top of, how like back in 2021, like GameFi was a big thing. Like there was Axie Infinity obviously blew up. And then I think Cedia's Heroes was the next one that really, really caught people's attention. And then there was another one, like, what was it called? I can't remember. But I bought like top on several different GameFi projects. And I've also been scammed into honeypot contracts. I think there was a while when the NFTs were blowing up. There were people sending loot token airdrops to wallets, and they would manufacture these transactions that look like prominent users have bought them. So I got honeypotted like 5 ETH into that. Yeah, I mean, there's been numerous cases that I'm in.
Awesome. And that's pretty funny. When you went from private equity to DeFi to what is now NFTfi, I'm sure it's still a small niche, and I'm sure it was even smaller then. What kind of gave you the conviction that, okay, this is somewhat of a crazy idea, but I mean, as it's proven now, you guys have pretty well product market fit. What gave you the conviction for that? Were you like just looking around all the time, like, dude, I need to long Milady's floor price? Like, what kind of gave you that high conviction? Because Ali actually introduced me to Ben in Bogota. So I know he's like a great guy. Shout out to Ben. But yeah, what kind of gave you that conviction?
Oh, it's a good question. I think there are several reasons. I think the biggest reason for me when I first started NFTperp was just like I've been asked so many times by my own friends, or just seeing people on, randomly shit posting on Twitter. It's just like, Bored Ape is up in this price. They're bearish on it. Where can I short it? And like I've thought about it too. Like, how can you actually short NFTs? The non-fungibility and supply issue of NFTs makes it pretty difficult. And like, funny enough, like I was chatting with the guys from AAA yesterday. AAA is one of those lending and borrowing protocols that's doing aggregation. So I was like, we're talking like how small the NFT finance market really is. If you really think about their potential target users at this moment in time. So I gave an example. I was like, if you look at all the NFT collections out there that are on Ethereum, how many collections are worth over ETH? There's maybe like 10 to 20 of them. And per collection, there's on average, like 8K collection sizes in terms of units. So if you just multiply, 8K to 20, you're really looking at not that many people that are your actual target users if you're targeting people that want to take out a loan against their NFTs. And it's not just one unit per holder. Like you have generally speaking, 35% to 60% holder distribution. So really we're trying to service a very, very small niche amount of people. So that's like a supply issue. And when I looked at NFTperp, a lot of people want to speculate on prices of NFTs, but they're gated. Gated acts in there's no liquidity available. Gated acts in the price point for these NFTs can be pretty high. So, we thought if you combine the two where you allow people to easily get involved in price action of an asset in the motivation to do speculation, and two, you remove the barrier of entry in terms of prices. So on an NFT part, you can trade, 0.001 DAYC or 0.1 Milady. It makes it extremely easy for someone to get involved. And we thought, I thought that's like a perfect storm of unlocking of features and motivations that people are wanting to have, and born NFTperp. Like I guess that's sort of the realization part. And we kind of thought about this for quite some time. And as we build and talk to more people, it just started to make more sense.
Right. Yeah, I mean, with any NFT like derivative trading, I think we've seen, and obviously with NFTperp kind of being the biggest name there, it's just a whole host of like problems that come up, or not problems necessarily, but challenges as compared to what we've seen with like ERC20s in the past. I'm hoping we can get into like a little bit more as to how NFTperp actually works in terms of like where the liquidity is coming from, how these assets or these contracts are being priced. Are you able to give like a quick high level overview just before we get into some of the more granular stuff?
Yeah, for sure. So NFTperp, let's talk about three things, right? Number one, you have to have and there's a couple of different protocols out there for perps in general in terms of how it works. First, let's break down how perps work. Perps, the full name is perpetual futures. Futures in the traditional finance sense, in equity and stocks or whatever you want to call it, they are purchasing contracts. You have the right to buy and sell, these different contracts at a certain date, and then when they expire, you have delivery. Either that's cash or the underlying asset. Now, perps first introduced by BitMEX, I don't know, back in 2014. I don't remember what date it was, maybe even earlier. Is you have these futures contracts that don't settle, so they just kind of roll over into perpetuity. The way that, and then the question becomes like, okay, how do you keep the price of perps close to the index pricing if there's no settlement? Because you can go in theory like anywhere it wants. And that's by the introduction of funding rates. So if you're overly bullish, overly bearish, while holding those positions, when there's deviations, you pay or receive funding rates, and that's typically peer-to-peer. So coming back to NFTperp, like how it works, we need to talk about three things. Like number one, the underlying mechanics of how price is calculated. Is it a order book model? Is it an AMM? Is it a GMX type of style of, or even synthetics, which is pegged to the Oracle, and you have like a collateral backing it type of model. And then we need to talk about index, Oracle, and then lastly we talk about liquidity. So NFTperp V1, it's a pure AMM model. So AMM means you have two assets in the pool. People can go long, go short by taking actions on the pool. And if you wanted to go long, you take in a margin in ETH, and us as a protocol mint you these virtual tokens. They're not actual tokens, they're just arbitrary numbers inside your account, and you can buy and sell into the curve. And that's the way it works. And the underlying liquidity is provided by the protocol itself. So when we first started NFTperp private beta on Arbitrum mainnet, we seeded the protocol with 100 ETH liquidity, and that 100 ETH is multiplied into the AMMs across all the AMMs that we provide. And we have a minimum of 10% open interest ratio, meaning open interest and insurance fund ratio, meaning the liquidity would seed into the protocol is the cap. If you 10x from there is the cap that we allow people in terms of open interest on notional value. So you can make sure when there's liquidations and whatnot, there's always enough insurance in the liquidity pool to back those bad debt. So that's how NFTperp works. Now let's talk about index pricing. So when we first started building NFTperp, like I mentioned about a year and a half ago, January 2022, there's maybe one NFT Oracle out there. I think that might have been bend out, or maybe bend out hasn't come out yet. I think they have. And the challenging part is like, there's no Blur back then. There was OpenSea, there's LooksRare, there's X2I2. And the challenging part about evaluating an index price for an entire collection based on the floor price only, and the definition of the floor price is the lowest ask on the order book on OpenSea at the time. And the problem with that is it's very sell-side represented, right? It takes one person to undercut the price of the current floor to change the floor in a pretty dramatic way, right? You can undercut by 1%, 2%. So if you, in theory, have a short position on NFTperp, and then you go under list by a percentage, and you can change your Oracle pricing pretty quickly, then you can, in theory, arbitrage this, pretty efficiently and make a lot of money. So that's obviously the reason that when we first came out to do NFTperp, no one else is doing it, because people thought that was crazy. And then maybe I am crazy. So the challenging part was like, how do you price an NFT collection, which in nature is they have all different rarity, like not one NFT doesn't equal to another. So sticking to floor price valuation was important, because that's how most people perceive NFTs values. When you think about the BAYC price go up, the number one thing you think about is the floor. Oh, what's the floor at? Or when Millie pumps to a certain level, like the number one question is like, oh, where's the floor price at? So sticking to floor price was important for us. Now, how do you price an NFT collection's floor without it being easily manipulatable? If that's a word. We came to a conclusion where we think there needs to be a cost associated with a valuation. And what I mean by that is when you undercut a listing on OpenSea or Blur, it doesn't cost you anything. Maybe on OpenSea you need to pay a gas. On Blur you don't. And we think evaluation can only be verified when there's a cost associated. So that means a transaction fee on the platform paid. So, back in the day, OpenSea does that, obviously. And a royalty paid to the creator. And this is mutually agreed upon between buyer and the seller. So when you can replicate these transactions over and over again through time, through repetition, and through our statistical analysis in terms of like where most of the floors are traded, you can create this price ranges that are backed by real buyers and sellers with a fee paid, with the cost associated. And then we aggregate all this data, ingest it, average weight it, and then we also apply our wash trading filters. So that includes like token ID tracking, wallet tracking, abnormal behavior tracking. And then we put all this data back on chain via Chainlink. And our smart contracts on the NFTperp Oracle, on the NFTperp AMMs read these values on chain and then go ahead and put that on the protocol so people can trade around it. Fast forward to a year and a half later, things are very different now, right? Because Blur's come out and that's sort of skewed the market a little bit with a lot of different things. Like, namely, there's no transaction fees on on Blur. There's no royalties on some collections, and people are trading not typically for the reason of buying and selling with speculations. Like a lot of it is pretty heavily skewed because of the points that they have. So that's changed things quite a bit. And we need to learn how to adapt at the same time as well. So this is not live yet. We're currently optimizing our Oracle to accommodate our own methodology that I just spoke about, and then including some of the listing and bid data in weighted average. So that's how index work for NFTperp. And lastly, liquidity. Like I kind of briefly talked about earlier, like the protocol seeded liquidity early on, and traders come in depositing real margin and moving the prices on a linear curve on the AMM, therefore causing price action. And then you only really make money or lose money when there's price action on the protocol. So on a fundamental level, NFTperp V1, that's how it works.
Okay, lots to unpack there. I guess on that last bit, one of the things that I've been curious about since launch is, well, I guess to start out, who the LPs are, which you kind of just answered, but whether or not there will be an opportunity for users to provide liquidity and subsequently earn against their liquidity via NFTperp. Is that in the books for V2? Is that farther down the line? How heavily are you guys think about that at this stage?
Yeah, so we've built 2 LP models already. One is bootstrapping into the insurance fund. So you become an insurer of the protocol, you share some revenue. And then we've also built the external LP model. So pretty similar to Uniswap V2, you can just choose a pool, deposit your collateral, and deposit your money into it, and you can supply liquidity for both sides. You become a counterparty, though, for traders in direction. And as we are building this and collecting more feedback from current private beta, we're like, oh wait, like there's a lot more that we can build to make this really a really good experience for users. So NFTperp V2 will include, like you mentioned, LP positions for users. So it's not just the dynamic of NFTperp community right now is protocol and traders. Now, adding into V2, there's going to be another dynamic into it, which will be liquidity providers, and that they're essentially makers, right? So there will be that, and a big improvement of V2 will go into how price functions, how this price discovery works in NFTperp, which is probably on par with the DeFi perps protocols out there right now. So we're pretty excited to roll things out.
Gotcha. And then what kind of liquidity is, or I guess was provided by the protocol and will be required of users in the future? Is it, I guess if it's a VMM, it's probably single-sided right now, but are you guys providing that mostly in the form of NFTs or ETH? And is that going to change for when this gets open to the public?
Yeah, good question. It won't change. It will still stay with cash. You can, and the interesting thing about this is when you think about this, when you're market making a perps protocol, let's say you're market making on, what's a good example? DYDX, or if you're market making on Binance perps futures, you are actually not providing any underlying liquidity. You're just providing cash, right? It's the same thing with NFTperp. We don't need NFTs. The moment that we restrict ourselves to a physically backed perps, we stop being perps. And that's the beauty of creating perps protocols. It's cash based, so you allow the protocol you allow the NFTs to be fungible, if you will, on our platform. So we'll stay that way.
Right. Yeah, I like that as a potential and probable LP in the future. I think that's something that's would definitely be valuable for someone like me. I'm wondering, so we've had we've had a couple of different options protocols on the podcast in the past couple weeks as well, and they've spoken a little bit to how they see options filling a space that perps might not necessarily be best suited to do so, or even just generally like having different types of derivatives for different traders for different purposes. How do you see that problem? Because right now, when we look at like the market for ERC20s, obviously perps are far and away the top like derivative trade that we're seeing. Not to say that options aren't making progress, but there's like a clear skew there. So do you see the same thing kind of taking hold in the non-fungible token space, or do you think that there's sufficient room for other types of contracts as well?
So I think it comes back to the main point that I brought on early on, right? Like what does the supply look like? If your mechanism is based on a physically delivered option, you always will be constrained by the amount of collections units available out there, and therefore limited amount of actual users that are relevant to your platform. So that's number one. But then like options have different type of options too, right? Like you have the I think maybe the first option protocol for NFTs that I know of would have been blanking right here.
Was it Hook? It was either Hook or OXDX.
Hook is one of them. I was gonna say Putty.
Putty, that's right.
Yeah. So so that's an interesting part, right? Like the hook guys focus on call options. Last time I checked, and the Putty guys, even though the name is Putty, but they do have calls as well. But those are peer-to-peer, and those are not cash settled, right? And then the contracts are not tradable. So I think the next protocols that allow you to have synthetic options or even tradable contracts that's universal across collections can really break through the barrier and the bottleneck for NFT options, tackling specifically on the liquidity side issue. Until that happens, I think options are great, but it's incredibly niche.
I was not aware that any NFT options protocols actually required or even had the option for physical delivery upon expiration. I kind of just assumed they'd all be cash settled. So now hearing that, I'm like wondering why that would even be the case, because I don't know, even in the ERC20 options, like you don't often see the delivery of the asset. It's often just cash settled. So that's interesting to see, something to dig into there.
Yeah, for sure. And then I think the interesting thing would be like, okay, once you have the options, like once you have these contracts, are they universal and are they tradable? Because there's a difference between buying a put, selling a put, and be the direct counterparties. And you have like two players, right? If someone is selling an option, someone's buying one, and do they have a marketplace for it, and can people trade on it? Like that's where it really takes scale.
Yeah, right. And then I guess like kind of the question I started with, kind of the flip side of that, how do you see NFTperp sort of leveraging and integrating the greater like NFT finance space in the future? Like could you imagine greater synergy with like lending protocols, or like, I don't know, like an efficient like AMM would be super interesting to me. I know Caviar just introduced concentrated liquidity. Are you guys thinking about deeper integrations with the broader NFT finance space?
Yeah, that's a good question. I think there's a couple of protocols out there that are experimenting with NFT margin trading. So DIVE was one of them. So the idea is that you can supply NFTs with the assumption that you might not get back the same NFTs that you lend out. So someone can go borrow your NFT, sell it, and buy back in the open market and send it back to you. Whatever NFTs, like as long as it's in the same collection, that's fine. Type of short selling. So I thought that's interesting. With us, how we think about like further integration with other NFT lending and borrowing protocols or other NFT AMNs, I would say a relatively low hanging fruit, but depending on traction, would be allowing users to come to NFTperp, use their NFTs as collateral, and have liquidity supplied by the infrastructure that these NFT lending and borrowing protocols provide via LPs, and entered a NFT as collateral long or short. So if you have an ape, for example, you can kind of NFTperp, you can gig along. So underlying, you will be taking a loan against your NFT, take a 10x leverage on ape again, and you either go big or go home, right? And you can also hedge. So if you don't want extra, you don't have extra ETH waiting on the side, you can also take out a loan against it, take a short on NFTperp directly using NFT as collateral and self hedge. And you may even have higher funding rates if you're shorting, depending on where the funding rate is. You can have your short positions to be earning yields and paying back the loan interest on the underlying collateral.
That's nutty. Yeah, if you can like layer that on top of lending and borrowing, or even something like buy now pay later, you can end up with like super leveraged long positions. That's
Yeah, it's quite interesting.
It'd be
right?
exciting to see.
Yeah, there's a bunch of stuff out there, and it's very exciting because we're literally like creating something out of thin air with a lot of these different protocols. And they're the guys from Astaria. They're working with Upshot. They just launched yesterday. I'm super bullish on Astaria, by the way. Like they're experimenting with Uniswap V3 positions being collateral, so you can provide liquidity to Uniswap V3 positions that want to take out loan against it. The Uniswap V3 positions are generating yield because they're earning fees. Those fees can pay back their interest rates on taking out the loan, and then you can take those additional capital to deploy into more Uniswap V3 positions. So if you have like a pretty big market cap on those positions in different price ranges, and there's a way to index it and price it, you can create perps on these options because they're essentially put options, right? So there's like a bunch of stuff that can be explored, and I think the teams that are willing to dig deep and network and explore different ideas will come out and build something pretty interesting. Now, there's no guarantee that these will actually be used. These are all just pretty decent ideas, but the possibility is, endless.
I think if you can make a product with that amount of leverage against something like a Belady, like you'll have some users at the very least. There's always
Sure.
I feel like there's always a market for more leverage, which is
Absolutely.
for better or worse, that's the way things are.
Yeah. And then you can create like prediction markets on these defaults or with different rates, which is what the 2008 people call CBO. Which is, yeah. Anyway, I'm gonna get into too DJ here.
Lots of composability there. I wanna hop back real quick to something you said earlier. I believe you mentioned that the caps on open interest. For those who don't know, open interest is essentially the sum total of all the trades long or short in a given day. You mentioned that the cap on that for a given day was 10x the insurance fund. Is that correct?
Yeah. So that means we would ideally want to have at least 10% of the total open interest on the platform stored in the insurance fund. So in the case of any sort of bad debt, the protocol has enough to cover. 10% is a pretty big buffer anyway, but that's like an optimal rate we want to keep at.
Gotcha. And how often do you come close to hitting those caps often? Because I mean, obviously it appreciates daily, I guess, given that the insurance fund is taking fees from the protocol. But are you guys nearing those caps regularly?
No, we always hover around like 60 to 70%. We never really got to 100% of it.
Okay, gotcha. My next question was going to be like whether or not it's been a challenge handling the kind of volume you guys have been seeing. But if you're not nearing those caps, and if the insurance fund is consistently increasing, I would guess that's not been too much of a problem in the recent past, at least, right?
Yeah, and a lot of it is also like controlling growth, right? We want to make sure as a protocol we're growing at a sustainable pace, and we've learned a lot from the past nearly 6 months of being on private beta on Arbitrum to really prepare us for the V2 and open public.
Yeah, I'm excited to see what kind of new integrations and kind of how much smoother things start to get with V2. I mean, you guys had a lot of liquidity come in. I think it was around $400 million in total. Has it been a struggle at all kind of dealing with that? And how much do you see like optimization and kind of fine tuning things being a factor in the next versions of the protocol?
So about 2 weeks ago, Elon Musk tweeted the Milady meme,
Yeah.
and our website went down for 2 hours. This is like a twofold of issue. Like, number one, our infrastructure wasn't strong enough to handle like really high traffic. There were like probably 30 to 50x number of traffic on our platform within like seconds. Our server went down, and it gave us a pretty good lesson in terms of how our, besides the on-chain stuff, mechanics of the protocol, like how is our infra set up to sustain like such high traffic, moments. So we're doing a revamp of that. We're taking a look at like how Oracle performs under these like pretty extreme pressure. Basically, it was a stress test, and we didn't pass at all. Obviously, it wasn't great. I didn't sleep more than 2 hours in that 24-hour window. Learned a lot and gave us a pretty hard look into our infra. A lot of the things that we didn't expect would failed. So yeah, there's a lot that went into it, but it really just prepares us for situations like this in the future. So
Yeah,
I guess
those
that's one of
things
the
are,
reasons why we're in beta.
yeah, that's almost impossible to prepare for. But I think you guys handled it well, and it brought a lot of good eyes to kind of the possibilities and the use cases of the protocol. In terms of you guys are still very early, but one way that I like to kind of pose this question around kind of decentralization and tokenomics, kind of referring to what kind of weaknesses you see within the way the protocol is right now, and how you guys envision a potential token or maybe something to do with a Mafia NFT, kind of how you guys think those can solve the issues or kind of incentivize the issues that you guys are having within the protocol. How do you guys go about thinking about that? I know it's probably a bit far out, but what have the discussions look like around that?
Yeah, it's a good question. So I think, generally speaking, you don't want tokens, any sort of tokens, either it's NFTs or fungible tokens, to be supplementing problems for your protocol. I think as a builder, you should always find tangible ways without subsidies and create a product that's sustainable by itself, probably without a token too. Now, obviously, like different protocols are different, right? For some protocols, you need a token to function. Now, for us, it's really that first year of discovery of building this product. We're focusing so much on like the product itself and protocol itself. The token side of thing has become sort of a second thought for quite some time, which we don't think is optimal. Like, as a builder, like obviously achieving product market fit is the most important thing first, and then applying a token system, a model that applies to all of this and make it a cohesive economic model is the most important thing. So whether that means being careful with over emission and recognizing the importance of value accrual to a token, and recognizing the importance of governance, utility of a token that's being functions in a protocol, will become a big priority when you launch a token. So yeah, I mean, there's a lot of questioning. Like, you don't want a token to be just like a speculation type of thing, or purely governance. I think you can draw pretty good examples from giants in the past that have done well or had done well for a little bit and then crashed. And you can also draw different inspirations from protocols that have done quite well and sustained, GMX being one of them. So we're drawing different inspirations from different protocols that have come before us, have done really well, so we can, get into different benefits of them all. Now, we do have a VNFTP right now that people have been rewarded for. And those are a retroactive airdrop type of campaign where tokens are not transferable. We have a lot of governance functions on it, so people can vote on proposals. So there's that component to it. And the reason why we want to do Mafia Nuts, and which, by the way, the listeners today, if you're interacting with this Twitter space, you can get a chance to get a wireless spot for the Mafia Nuts. And the reason why we want to do Mafia Nuts is because, by the way, that's a good audio cue. The reason why I want to do Mafia Nuts is because, personally speaking, I think there's something that's so special about PFP collections, if done well, is they've captured so much of the community's identity around the project. It almost creates like a stickiness around it and creates a sense of belonging to the community. And we want to make sure we have that as well as an NFT related project. We want to have that sense of culture and identity sort of integrated into the server. And that's the primary reason why we want to do Mafia Nuts. And then we started thinking like, how can we make it different? And this would, without giving in too much details, I like to say that Mafia Nuts really will integrate with NFTperp well in the form of gamification, in the form of, think about it, if you play video games, Counter-Strike, whatever, like you can collect a bunch of different things as you play in the game. If you invest more time, energy into it, your things like, level up. And with any other games, you have different sort of milestones you can achieve and you level up different ways. And we kind of think of the Mafia Nuts collection being similar in that sense, where it services the traders, it services the community, but also recognizes achievements within the protocol itself. And Mafia Nuts is not for everyone. You can probably see some of the teasers we put out already. Like it's not like, PG friendly. It's not for everyone. We're kind of our own little fun culture here, and we're unapologetic about it. Yeah, and that's how I think about why NFT collection in general, and that's how I think about having a token NFTperp. If those functions are not met, like if the underlying reason for us to create an NFT collection is to make money, or the underlying reason for us to have a token is to have a token, then we won't launch it at all. Like we want to make sure there's enough reasoning behind them before we even do anything with it.
Yeah, I think that's the best way to kind of handle a token or an NFT. I mean, you see a lot of protocols kind of drop the ball in that aspect, being too early and too like chilly of a token. But I think you guys are doing a great job in finding great product market fit, and you guys will only do well from here. I know you have your podcast in a few minutes. We're gonna throw some hot takes in here that we like to do in the end. Kind of just a bit about you personally, kind of the things you're into. We know NFTperp is on Arbitrum. Are you an ETH maxi? Is that kind of your home, or are you agnostic?
Oh, that's a good question. I'm ETH. Oh fuck! Put me on the spot. I kind of am an ETH maxi, but I also recognize like how difficult it is for ETH to scale, and that's why I'm bullish on layer twos.
Good answer. And then being in the NFT space, of course, you've probably seen, PFPs, different projects come and go. What are some of your favorites and right now? And if you had to choose between apes and punks, which one would you go for?
Oh man, apes and punks are just on Yuga now, so there's no point choosing between them. The favorite NFTs I have right now, which is like going like very, very two different direction. I love the Miladies. I think they've captured a really crypto native and very free and degen type of people, which is people that I really relate to. I also like the Pudgies. I think if you have listened to like the stories and the views from Luca in their interviews and how they've gone about what they really think what Pudgy should be, they're really treating this like a proper IP company. Like they want us to be like a Mickey Mouse someday, or have it to be like a very family friendly type of character and figure that you can watch a show, or you can have your kid having a toy on, which is I think it's incredible. You're really tapping into the masses as opposed to focusing on just the crypto people. So very, very two different trends of directions, collections or in the form of PFPs. So I would say probably those two are my current favorite ones. Between punks and apes, I would probably choose punks prior to it, getting acquired by Yuga. Yeah, but at the same time, I have incredible respect for the Yuga Labs team in terms of execution. They've done incredibly well for themselves.
I think we're I think we're still waiting on someone to answer apes to that question. I think everybody's either like kind of dodged it or they've said punks. So interesting skew there. Kind of to like shift over to a different vertical for a second. Asked about like your favorite NFT collections. Do you have a favorite like perp decks in specific? Is there any that you look at, any on-chain decks that you look at in the space for, I guess, like inspiration, or ones that you find to be like more elegant than others? I mean, I know you guys obviously took quite a bit of inspiration from Perpetual Protocol, but are there any others that stand out to you?
Yeah, I mean, definitely like Perp is one of my favorite ones. They're the OGs that came out with the virtual AMMs, and their V2 is incredible. Outside of that, I would say Hubble. Hubble is this is probably less well known, but they're a similar-ish type of AMM protocol on AVAX, and their V2 is incredible. It's like a entirely decentralized protocol built on a subnet that has like very, very efficient execution model that we haven't really seen anywhere else. Essentially, like it's kind of like similar to DYDX, but in a very clean and efficient way. Outside of that, I think I have pretty strong respect for the guys from GMX, but obviously like that's kind of limited to the blue chips of fungibles, not applicable to smaller collections. Another one I really like, I'm not sure where they're at right now, it's called Crescent.network. This is another one I'm very, very fond of. Yeah, outside of that, maybe Synthetics. Yeah, Synthetics is they're pretty strong. But I would say my current favorite is Hubble, and very excited about their V2 coming out.
Interesting. Yeah, I haven't heard of that one yet. Definitely, Synthetics has definitely been interesting as of recently. I haven't heard of Hubble or Crescent, so you're giving me a couple to look into, so that's good. We're gonna wrap up here because I know you have another pod to get to in a couple minutes, but really appreciate you coming on. Funny story actually, when me and Cedo first started this like NFTfi season, our goal by the end of it was to have someone from your team on, have NFTperp on. So it's awesome to have you guys on here.
Your goal, are you guys done now, or?
Yeah, that's it. We're turning pods over.
Well, no, appreciate you guys having me on
Yeah.
too. I do so many podcasts as an interviewer. I don't get onto podcasts as often as I want to. So thank you guys for reaching out and having me on.
Appreciate it. Thank you so
pleasure.
much.
All right. Talk to you guys next time. Have a good one.
You too.
Thank you.
See you guys. Thanks everyone for coming.
Peace.